If you are a contractor looking for a mortgage, then this one is for you. You need to listen carefully because being a contractor is one type of income where you are treated a little bit differently when it comes to mortgages. You've got some options that other people don't. So if you want to know what they are, listen up, let's go. Hey everyone, welcome back to the channel. My name is Adam, I'm an expert mortgage broker, and today I'm talking all about contractors. Now, contractors, your income is a little bit different to a lot of other people and you have some options that other people don't. So, let's find out what's best for you. Now, before we begin, as always, if you find today's video useful, please give us a thumbs up, subscribe to the channel because there's loads more coming. And if I don't cover anything that you're particularly interested in as a contractor or as any sort of self-employed person, please do drop a comment below. I've got loads more content for self-employed people coming up. So if you put some questions in the comments, I can be sure to answer those. So if you are still contracting even after IR35 and all the changes there, then this video is going to be useful for you. So whether you're contracting, you might be a sole trader, or you might have your own limited company, you might do it through an umbrella company, all of these things, there are still lenders keen to lend to contractors, and there are some lenders, some big lenders, who have specific criteria for contractors. So I'm going to give you a fairly broad level overview of the different options we've got and the things we might want to consider. So the first option we've got is the same as everyone else that's self-employed. If you're self-employed, or you've usually got your own limited company if you're a contractor, if you've got those things, we can just use your self-employed or your limited company figures to get your mortgage. And there's videos on the channel about that. But as a contractor, that's probably not the best option, because when you pay yourself from your limited company, let's say, you probably don't take all of the money from your contract, and maybe you leave some in the business. You're going to have some expenses in there that we need to consider as well. So actually the net income that you end up with when you're self-employed or a limited company director is going to be less than the value of your contract. Now, it might be that self-employed or director income is enough to get the mortgage you want, and if so, then great, we've got more and more choice of lenders. But usually that's not going to be enough. So let's think about then how a contractor works. So generally you get paid by the company you work for directly, or maybe it's through an umbrella company, that's fine. Maybe it goes into your limited company and then you pay yourself after that. There's a few different setups that we can have as a contractor. But the key thing is being able to use the value of your contract to get yourself a mortgage. Because if we look at you as self-employed or company director, we're going to average the last 2 years' income, and maybe you're on a lower contract before and now it's higher. It's quite historic as well. So that's probably going to be lower figures than what you're on now. But the beauty of being a contractor is that you usually get paid a day rate, maybe it's weekly or monthly, or it's just a value of a contract. Either way, that is going to be a higher figure for us to look at. Now, the good news is there are lenders that will use these figures. So let's say you're on a day rate, lenders will usually multiply that up for the year. Now, they won't use 52 weeks because we're all going to have some holiday, aren't we? Normally they'll use 46 weeks as a general rule. So let's say you have a day rate, they'll times it by 5, times it by 46, and that is the income they'll use for you. So if your day rate is, let's say, £200, then times 5 times 46, coincidentally, that's actually a £46,000 value of your contract, £46,000 worth of salary that they're going to use. If your day rate's more like £500, times that by 5, then by 46, that's £115,000. So a big difference there. But if you're on £115,000, you're usually going to have a limited company for that, and you're usually, I would say, probably not going to take all of that money out of your company. If you don't need to take the money out, why would you? Because you pay personal tax on it, so you can leave it in the company for a rainy day. If you have a break in contracts and things, it's still there. You can still draw your salary and dividends out. So we need a lender that's going to use that gross figure, that contract value, and there are plenty of those to consider. Now, if your day rate is that £500 example, and let's say you take out sort of £50,000, that's the kind of roughly the high rate tax threshold, isn't it? So let's say we take out £50,000 salary and dividends, we go to a lender to do that, versus going to lender on £115,000, that's a £65,000 difference in your income effectively. So at 4.5 times income, which is pretty normal, what's that, £290,000 difference in the amount you can borrow. So we're talking big differences being able to use the value of your contract. Now, when you're a contractor, your history is still quite important to the lenders. We don't need years of it, and this changes from lender to lender, so this is a fairly broad example. If you don't fit exactly within this, then don't worry, because there are going to be other options as well. But generally, we're going to want to see a 12-month history of contracting, and usually 6 months left on your contract. Now, as I said, if you don't fit that exact framework, there are other lenders that we can go to that may well take a view or just have slightly different criteria. That's a fairly broad term. Generally, if you've got a couple of years, let's say, history, and a year or so left, or a few months left, or your contract's due for a renewal, there are going to be options, there are going to be lenders we can go to that will help you as a contractor renew your contract rate. So when we do a mortgage for a contractor, we're going to ask for those contracts, so we'll ask for that history. We might ask for your last one, or even your last couple of contracts, so we can show that track record. We're going to want your current contract as well, so we can see when the end date is and how much you've got left. And then in terms of other proofs and things that we're going to need, same as everyone else here, we're going to need 3 months bank statements. Lenders may want 3 months bank statements from your company as well to show that the money goes into the company. Not every lender, but just in case, it's a good idea to have those ready. If you get paid through an umbrella company, then we're going to want some proof of that as well. So that might come in the form of a pay slip or something. You tend to get some sort of pay slip or advice, something like that, when you go through an umbrella company. So we're going to want the last few of those. Current contracts, make sure that there's some time left on the current contract as well. So we're going to want all that, as well as proof of ID and things. But other than that, really it's a fairly straightforward process getting a mortgage as a contractor. It needn't be as complicated as a lot of people would have you believe. The other question we get quite a lot is how much deposit we need to put down as a contractor. Well, really that's the same as everyone else. The more deposit you've got, the better, because it opens up more options. You can get a mortgage with 5% deposit. That's no different to a contractor, but you're just going to have more options with a slightly larger deposit. And of course, the rate is going to come down as well, so it's going to cost you less. So the more deposit, the better, but it needn't necessarily be any different to anyone else. Okay, so that is a fairly broad introduction to mortgages for contractors. If you have any specific questions, please drop them in the comments. You can also pop onto our website, there's a link below, link in the description to go on there, and you can book an appointment directly with us. So if you've got specific questions and you want to actually talk to someone, it's completely free to arrange an appointment with one of our experts. You can do that, and then we can run through your exact situation. Alternatively, wait for the next video and there will be some more information that is relevant for you, I'm sure. So I will see you then. Take care.